In this video, I'm going to share with you top 10 tips on what you should be looking out for as a property investor. So things like stamp duty, land tax, things like furlough, or when furlough ends, what's going to happen, things you should be looking out for. So this very quick, succinct video is going to put you in good stead for 2021. The stamp duty land tax holiday ends in 31st of March 2021. So if you're interested in buying property and you want to make savings on stamp duty land tax, then make sure you purchase the property before the end of March this year. And it's estimated that around 650,000 properties are due to complete end of quarter one in 2021, because a lot of people are looking to take advantage of the SDLT break. So the property market in the first quarter is going to be quite rampant and buoyant. Simply speaking, the SDLT holiday, what it did was to increase the threshold for when stamp duty isn't payable from 125,000 to 500,000 pounds. And interestingly, that was available to people who buy property in their own name, partnership and a limited company. But obviously if you own a second or additional property, you still pay the 3%. So you could save up to around £10,000 if you're buying a property for £500,000. So that's one of a big cash flow advantage if you're looking to buy property. Now, despite the global pandemic, Brexit, which was finalized at the end of last year, and the difficulty we've had with the economy, the property prices are still holding out. Even in my own experience, when I'm looking at deals, they are selling well, and the good ones are selling very, very well at asking price. But that's just based on my own experience of having put offers forward on properties. And apart from London, the rental market's very, very strong indeed, and house prices are increasing. According to Select Property Group, a third of property investors that were surveyed across the globe intended on investing in the UK in the next 12 months. That's a big number. And this is a good indicator that the property or demand for property in the UK in 2021 will remain strong. I've got my own views on that, which I might share at the end or on a different video. But according to this particular survey, the intention is quite a few people want to invest in the UK in 2021. Moving on, as you know, housing is a necessity, and we have a shortage of supply, and we have had for quite a while. What that means is, as things stand, it's always going to be a worthy investment, depending on how you want to look at it. I always say look at obviously cash flow, and the capital appreciation that happens over a number of years is a bonus. Other people have a different view, and that's fine. We all see things differently. But people are going to need somewhere to live, and a lot of people can't afford to buy a home, so they're going to have to rent out, which that therefore means that property investing is a good idea, and it's a good business, both short-term and long-term, which works incredibly well. So that's something that you should bear in mind. At the moment, interest rates are low. So if you're looking to refinance and get a buy-to-let mortgage, there are good deals available, and we don't know what's going to happen with interest rates. Some people talk about rates going negative. Some say they're going to go northwards or north, and no one really knows the answer, but apart from I guess the governor of the Bank of England and his team. But rates are really good now, and have been for a while, so that makes the whole thing viable from a pure return on investment point of view. However, properties aren't always being valued at the price they're being sold. I've seen that quite a few times now. That's a challenge, and lenders are taking a lot longer and asking more questions. So as long as you're willing to be patient and answer all the questions that the lenders ask, you'll do okay. On that, in fact, I applied to refinance one of my property development deals. We started in December 2019 and we completed yesterday, so that it took best part of 13 months, nearly even 14 months to complete just the refinance deal. It was hard work. We got there in the end, and it's never taken me 13 or 14 months before. That's just one example for you. I know other people are having similar challenges. Investing in houses is always there's always opportunity in that. The market's well known, and it's worth looking at. I think if you're new to property, I'd say tread with caution, because the market may self-correct and prices may come down based on what I think and what I'm seeing may happen in the future. But at the moment there's not that much physical indication of that. So if you are a first-time buyer, or investor, new investor, make sure you do your research and look at things properly before jumping in, because you might jump out of the frying pan straight into the fire. Alongside that, a lot of people are looking to work from home, and some are finding that they don't have enough space at home, or they need more space, so they're looking to buy a larger property. That means there's more people looking to buy property. They might hold on to their existing property, or they might sell their existing property, which then creates more opportunity for you if you're looking to buy property. And for this exact reason, particularly in London, flats with no outside space are in low demand, which has caused a price drop on those types of properties. Moving on from that, what does this mean for commercial property and offices? Because many companies that I speak to are looking to downsize. They quite like the idea of working home. Some of them are finding that their team members and employees are more productive and more focused while working from home, and that's working well. So when the pandemic finishes, lockdown finishes, we're all out and about, we've all been vaccinated. By all I mean those who want to be vaccinated have been vaccinated. What's that going to do to those empty offices? I think there'll be more offices available to let, because of people wanting to work from home, so there'll be less demand for office space per se. I think more companies will either lease out their offices or will just sell their offices, and that creates more opportunity for you if you're looking to buy an office. If you're into commercial conversions and PD, permitted development, that creates opportunity for you too, so keep an eye out for that. I think commercial conversions is, in my opinion, the best property strategy, and I'll talk about that on another video because I do a lot of that. But that's an opportunity you may want to think about if you're looking to diversify your property portfolio or your property business, or if you're new to property, commercial conversions might be one step too far. You might want to just get into some of the other strategies and then think about doing commercial conversions. That's not to say you can't do commercial conversions straight away. All I'm saying is get your feet under the table, and if you don't know much about property, get used to it first and then go on to looking at commercial conversions. But then again, you could buy a small office and convert it into, say, 2 or 3 or 4 flats, and I guess most people could do that with having the right power team around them and having the support. There's currently much higher demand than there is for there is supply, which is partly why house prices keep increasing month on month. However, with the expected rise in unemployment when furlough finishes in April, is that going to change? The likelihood is yes, because more people will be unemployed. Therefore, they might not be able to keep up with their repayments on their houses. Some of them might be looking to downgrade. Some of them might be looking to sell their houses and look to rent. And all of that might mean there's a much higher supply, less demand. Some people are apprehensive because they think house prices are going to drop, or we're going to have a property market crash. And what that means is we might have a reduction in house prices. So if you're looking to buy and you've got the cash, the facility, then you might want to hold on and wait more to see what happens in the next 6 months. And finally, capital gains tax is under review. It's speculated that there will be an increase in capital gains tax when the Chancellor issues his statement in March, which is in a couple of months' time. If that happens, you'll have to pay more capital gains tax when you sell your property or when you sell your property business. So that's something to watch out for. It's going to have a huge impact on businesses and on property investors. So make sure you follow that very carefully, and I'll update you on that as soon as we know exactly what the Chancellor is doing, which will be obviously once he's made his statement.